You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Carrie Lutz. It's 1/26/22. Well, today's Fed Day, and we are all waiting with bated breath to find out what Jerome Powell has in store for not just the U.S. economy, but for the global economy and especially Wall Street. Everyone is on pins and needles. Price of gold is down $16, $17 an ounce. Wall Street is having a usual pre-Fed orgy of higher prices and higher volume. What does that mean? Well, our good friend Dutch from Carnivore Trading.com is with us. Dutch, welcome back. So what do you make of the party?
Well, I think that we're looking at a situation where the Fed has plenty of ammunition to sort of back off the hawkish talk if they want to. And I think if they just give us a inkling that, hey, the ISM numbers weren't that great, the other data like labor data and retail demand over Christmas and everything was pretty bad. There's enough ammunition there for them to kind of soften their talk a little bit. And if they do that, I think we're going to ignite quite a rally. I think guys are getting ahead of it a little bit right now. No matter what they say, if the reaction is positive, we're going to see, quite a snapback run here. How many days or weeks it'll go is hard to tell. But, there are a lot of very oversold situations here. We were fortunate at Carnivore coming into this debacle, and we even wrote about it last week in an op-ed that got published. We were feeling like everything was rolling over and a lot of things were breaking their trend lines. So we got short the S&P and shorted a couple other things. We also think that we shorted Robinhood. And the reason we did was our thesis there is pretty simple. We think that the buy-on dippers have gotten so destroyed in the last couple of weeks of trading that they're throwing in the towel, capitulating, as we say. And we think that their announcement tomorrow is going to be that trading volumes are off significantly. The growth in accounts has slowed or fallen. So I don't think we have a lot of good things to hear from Robinhood. Crypto has fallen off the table right at the time that they were starting to issue that as something people could trade. So I think that, and so we made a lot of money on that short. We covered all of our shorts and we kind of came into the last couple of days hiding out in some fertilizer stocks, believe it or not.
I thought that was the primary product of Wall Street was fertilizer, but not such a refined product like potash, but the raw stuff.
Yeah, that's right. That's pretty funny. There's so we were hiding out there and doing pretty well, and that helped drift our account balances up. And so we were up about 18.18% before the start of trading today. And we are dipping our toe in here lightly into some very high beta positions. We really like Upstart. We first bought it at 79. It's now about 104, 105. That was just 3 days ago that we started buying it. This is a real company with a real product in the artificial intelligence space, and it's a volatile stock. It's an aggressive trader stock. It trades very sloppy, and the way we categorize that is it really tries to shake you out once you come in. So you have to kind of decide that you're going to slide a stop under this thing that's pretty wide, but go for the ride. And it's a great asymmetrical trade that we see right here, because if the rally is ignited, there's absolutely no reason why that stock doesn't go up 20, 30, 50, or even 100 points from here. And this is a company that's doing $270 million a quarter in revenue, has $30 million a quarter in profits, has a real product, and the growth is spectacular.
How's the volume been on it, Dutch?
I haven't checked lately. It's been I haven't seen that, and I'm not in front of my screen right now while I'm talking to you. But
I am. It's been up a little bit, not as high as it was 6 months ago, but but the volume trend looks like it could be moving. This is not the prettiest chart I've ever seen here.
That's right.
Peaked over October 11th at $390 a share, and now it's trading for 25%. So is this a bottom feeder deal or what?
This is a very washed out stock that has fantastic fundamentals in a very hot space. And so the idea is, if we're going to get this rally ignition, you don't want to be, I don't want to be with stocks that are doing zero revenue and zero profits and losing money, and hey, we're going to make money someday on hydrogen fuel cells or whatever they're doing. Those scare me, because in this kind of market, I at least like to have the fundamentals kind of underpinning my trade. Okay.
I'll buy that. I'll buy it. It's an interesting prospect there for sure. Is this a case of BTFD, as they say in Zero Hedge all the time, by the blanking dip?
Right. Well, we would probably be scaling into this thing here and then see what happens after the Fed talks. If we get taken out on a stop, we're taken out. But if we go on a ride, then the way we do things at Carnivore is we start buying every point that the thing is going up in a trend. We just buy it and buy it and buy it and buy it and buy it until we feel like, hey, we've got a massive position here, a lot of profits, and then maybe at the end of the day we take it off, or we take 90% of it off and then let the rest go. And we've already done that with this stock once, so we're looking to do it again here.
Hey, I'm liking the volume today. It's close. It trades average 5.4 million. It's up to 4.8 and change now. And I got delayed quotes. I'm not doing the level 2s right this second to check it out.
No, you're right. You're right. Yeah, I got it. Yeah.
5 million shares. And we're just in the early afternoon. So the volume looks good. And as we're talking, the stock keeps going up. So you might be onto something. But for 2022, this is really a precarious market. Even if the Fed says, all right, we were just kidding, you guys will believe anything, we're not going to really do it as bad, but they got to come up a little bit, the rates, not as much as we promised, or they just don't address it at all, and then they just never raise the rates. Even if they do all that, this market's long in the tooth, and it's a difficult market to trade successfully with the conventional Wall Street strategies, right?
Don't just survive, thrive. The Financial Survival Network.
FPX Nickel is developing the large-scale Dakar Nickel District in central British Columbia. Within the district is FPX Nickel's PEA stage Baptiste nickel deposit, which is projected to be among the world's top 10 largest nickel mines by annual output. The Baptiste deposit has the potential for the lowest quartile operating costs at just $2.74 per pound. And compared to recent global nickel mines, the project requires a low capex. FPX is also commencing its first ever drill program at its Van target in the Dakar Nickel District. Surface samples have indicated that the Van target footprint is larger in scale and 10 to 15% higher in grade than Baptiste. FPX Nickel trades in Canada as FPX and on the OTC under FPOCF. To learn more, go to fpxnickel.com. That's fpxnickel.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, it is actually. And so you hit the nail on the head, Kerry. I mean, you can't buy something and just let it ride for 12 months here. I mean, you can do that, I suppose. But last year, a year before, you can do what we call a beta trade. Just give me the stuff that's got a high beta and I'll just park out there and make money. As the market goes up, it's going to give me a lot of juice and I'll make a boatload of money. This is the year of the alpha trade, and that means you've got to find, this is stock pickers market now, and this is a market for people who have the ability to use multiple strategies and tactics and to change with the market when necessary. And that's what we're very good at, because we don't stick to just one specific style of investing. Most investment houses would just say, we only follow technology stocks that have high growth. Well, okay, that's fine. But when those aren't doing well, what are you going to do to make money? And what we do at Carnivore, just like a real life mammal out on the plains, we got to use different strategies given the different weather, given the different, whether it's dark, whether it's light, whether we're depending on what kind of game we're trying to hunt. We got to make money every day. That's the difference between us and, say, an economist who likes to pontificate about what's going to happen over the next year or whatever. Our idea is a 4 to 7% return in a year in a market that has 7 to 10 to 20% inflation a year is no good. And we were taught how to make money consistently every month by some of the masters of Wall Street. And we were taught how to make 4 to 7% a month. And that's our goal. We happen to be up 18% so far this month. We've been kind of like a baseball player who is on a hot streak. We admit that. And we also don't make money every single month. I'm not going to claim that we do. We have tough months just like everybody else, but the Carnivore family of our Hall of Fame traders, they call themselves carnivores for life. They sign off with, hey, this is Mike from Miami and I'm a CFL. And I've started asking, what is this CFL stuff about a year ago? What's this CFL stuff? And people started telling me they're calling themselves carnivores for life. And I went, oh my God, that's so funny. Mm-hmm. But
that's great.
But these guys, they're smart. They're good. We have hedge fund traders, mutual fund traders. We have big time money managers running billions of dollars that are subscribers, all the way down to the guy who's got, $10,000 or $20,000 at Robinhood, and he wants to learn about investing and how they really do it. And that's what we're doing, is showing them that stuff.
Gotcha. Well, hopefully, Dutch, you will be enjoying your January effect while the market, if it breaks even for the month, is doing well. Do you subscribe to the January effect?
I really haven't put a lot of credence in my career on any of that stuff. Whether it's the January effect or summer rallies or any of that, I'm sure there's probably some statistical validity to it, to some of it, but I've never really used it as an investment trigger.
Hey, like everything works until it doesn't work, right?
And usually when I'm going to try something like that, that's the year it decides not to work. So
it's a guarantee. It's a guarantee, man. I wish I had a nickel. I don't know if you remember Johnny Carson or not, but he used to have this lawyer, Bombastic Bushkin, and whatever Bushkin told him to do, it lost money invariably. And it's like, I'm living in the Bombastic Bushkin investing universe. The only investments that always pay off for me is investing in myself. And Don't get me wrong, I've been doing just great in this market. I have no complaints whatsoever. I don't know that I could take temperamentally the swings and the dips. I'm not a trader mindset.
Right.
I'm just not that person. I would wish I could be, because then I could be a professional poker player because I'm good with numbers. But you know what?
Right.
I just didn't get those talents. So
Well, I'll tell you the thing that we realized at the end of last year was we're pretty good at picking sectors at Carnivore. So we decided to teach everybody what a long short market neutral trade was. And so for about 4 months, we paper traded some long short trades just to educate our subscribers what it looks like to, let's say, go long oil and go short, let's say, solar, and how to do that using, ETFs. And so after doing quite a few of these, people started to recognize that you could actually make money in a market that's declining, just as long as you're picking a strong sector on the long side and a weak sector on the short side. And so we started doing that. And so that's now become a component of everything. Every single day we have some long short trades that we're tracking that are on the system. We have people that are trading big money in our long shorts. And it's the whole idea of making money in a market that's declining or going up. It doesn't matter which way the market's moving. Just the whole concept of how do I make 5% or 10% or 20%? And I don't care which way the market goes. That's kind of cool. So we had a lot of fun. We had a lot of fun educating them on that.
That's interesting. So, you have the Dorsey Wright system there where they go for relative strength. And that's pretty much proven over time. It's just, it could be lagging, right? You could be hopping on that relative strength bandwagon a little too late.
Where that's the worst is oil stocks. Because the relative strength, they pop up like crazy, like they recently have. And every time in our history that we've decided that we're going to do a relative strength type of move with oil specifically, we're always wrong. Always. Oil on relative strength has just destroyed us. So I had a talk with Trader Z about it. I said, listen, don't talk to me about oil stocks and relative strength, okay? Talk to me about oil stocks when nobody wants them.
Yeah,
because that's how you have to buy that one.
I totally agree with you. And remember when Exxon was threatening to cut its dividend and all this stuff was going on, nobody wanted the stock. And it was a classic dogs of the Dow setup there. Classic.
That's right.
Classic.
That's right.
And it's a reason why those big stocks, even when they're trading in the dumps, they can always come back. And because financial size, strength really accounts for a lot, even if your underlying business ain't so great anymore, which I'm not saying oil is definitely not the case. Hey, Dutch, so how do we sign up at Carnivore, and what's the deal there?
So Carnivore has a 14-day free trial, and if people go to getourtrades.com or carnivoretrading.com, but if you go to getourtrades.com, you sign up, no obligation, 14 days, free trial, and in 14 days, you're going to get a sense of what we're doing. So we deliver a pre-market report. We deliver real-time trades that we are doing, that our systems are triggering. We'll usually do a midday type of report. And then at the end of every day, after trading is done, we send out our very irreverent and funny, full of crazy stuff. It's called the Market Wrap. And the Market Wrap is at the same time that it's extremely serious about strategy, tactics, and education, and also a rundown of all of our thinking regarding sectors and technical analysis and fundamental analysis. It's also funny as hell. So people really love it.
So even if you're not making money, you're getting a couple of laughs, and that in tough times alone could be well worth the subscription. Dutch, appreciate you coming. If you got a question for Dutch, shoot me off an email, kl@kerrylutz.com. We'll get you an answer. And don't forget, go over to financialsurvivalnetwork.com. Sign up for your free newsletter. Dutch, always a pleasure. Happy trading. We'll talk to you again real soon.
Thank you, Kerry.
Thanks for listening to Carrie Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.